I do want to switch gears here because, Jan, you also run the benchmark semiconductor ETF. That's ticker is SMH. It's up almost 70% in a year. So how much more can we reasonably expect in terms of gains, given how, blockbuster of a trade this one has been?
It's crazy, and SMH is up again today. I looked before I got on the show. It feels like a locomotive that won't stop. But listen, I think investors need to know, and we've gotten a lot of inflows this year, by the way, over $4 billion into SMH. But investors need to know some of the risks around some of the big constituents, like NVIDIA. NVIDIA's margins are in the 70% range, and some semiconductor companies have more been historically in the 50% range due to competition and other things. TSMC, which makes a lot of NVIDIA chips, is likely to increase prices. They've said so basically publicly. So I think that's one of the things that investors should keep their eye on.
And to that point, Todd, semis have been driving the overall market, but we saw last week that with NVIDIA's strong quarterly results, the major indices seem to have sort of hit a wall. So how do you interpret this, make sense of this? Can the markets keep on rallying with or without semis?
Yeah, listen, I would echo what Jan just said. It's crazy. NVIDIA is now greater in size than the S&P 500 consumer staples sector. Just to show you how much heft it throws around the index. So going forward, I'm watching what leveraged volumes look like into 3x semiconductor ETFs, into the 2x leveraged NVIDIA ETF. When I start to see that go multiple standard deviations above a few months moving average, then I start to get a little concerned that maybe retail and institutions are getting offsides. The other way to look at it is semiconductors are 11% of the S&P 500 now. That's up from 2% a decade ago. So they're extremely important to the economy, to the index. Of course, the S&P can continue to rise without them, but realize they are now just uber essential to the way that index works. And so if you're trying to gauge the health of the rest of the ETF market, look at all the equal weight indices, look at equal weight semiconductors, look at equal weight S&P 500. That's kind of my guide now going forward, since NVIDIA and TSM and all these companies have really taken over the macro environment. Again, I'd finish it with just the crazy description that Jan used again. So of course things can continue higher, but just know that they are hitting extremes, especially around the semiconductor space.
Well, on that note,
it's hard to sorry.
Go ahead, Jan.
Well, I was just going to say, it's hard to say it's just in a bubble because SMH has been outperforming for a decade. I think it's like the best performing ETF in the industry for a decade. So a lot of these are structural shifts towards the importance of semiconductors because of AI, but also kind of more of a winner takes all because SMH only has 25 stocks in it. So there are a lot of companies that have fallen away because they weren't able to compete with these winners. So there are good dynamics, but there seems to be a lot of inflows.
Yeah, well, a lot of inflows and, of course, so much buzz around AI is driving all of this. But, Todd, if an investor is nervous about this run and maybe whether or not it will cool off a little bit, but also concerned about persistent inflation and a Fed in a holding pattern, what to you looks like the most appealing next best place for growth?
I personally am looking at healthcare. I think healthcare is interesting, because there's been a ton of outflows from that sector, so maybe a little bit of contrarian play. And then healthcare's relative to performance to the S&P 500 is in its bottom decile historically. So we are in so bad it might be good territory. And I tend to wonder, does AI and what the chips are doing, does that somehow eventually leak itself into a healthcare type narrative where it's helping whatever medical type advancements there would be there? But I think if you're just looking for something timely and that's not as heavy on the Mag 7 in terms of index exposure, I think healthcare is a really interesting place, especially away from the GLP-1 type funds. I know we just had a couple of GLP-1 ETFs launched, so the rest of the space has been decimated over the last few years. So I'm looking for that as something that is a little bit more contrarian and perhaps a little bit dash for trash in a way. So investors should take a look at that space too.